Hey everyone, welcome back to Chip Stock Investor. It's Nick and Kasey, and we're here to talk about a newsworthy item that happened last week. As you know, we're not a breaking news site, so we've taken some time to digest that news and picked out a few key points from the co-presentation from NVIDIA CEO Jensen Huang and CEO of Intel Lip-Bu Tan.
Yeah, as Casey said, this is not a hot take. Obviously, the media was all over it and had a lot of hot takes out within minutes, really. Before the live presentation went live, there were some grand declarations about AMD's in trouble, all the ARM chip ecosystem, Qualcomm and everybody else is in trouble. Intel landed a huge victory. Yeah, let's just, hopefully everyone's had the weekend to kind of tap the brakes a little bit and think about this. And let's run through some of the key points that we actually know right now. The most obvious one is that if you own NVIDIA stock, like investors all over the world now do, either via an ETF or as an individual stock, if you own NVIDIA, now you also own some Intel by extension, because Intel stock is now going onto NVIDIA's balance sheet. We have that pictured for you here from our friends over at fiscal.ai.
You're going to see a number of charts from fiscal.ai today in our presentation. You can get 15% off any paid plan, including their enterprise plan, with the link right here in the video, fiscal.ai/CSI. Make awesome charts like us.
So what we can gather from this announcement that was made, NVIDIA writing a $5 billion check for Intel stock at just over $23 per share. So about $5 billion will come off of NVIDIA's cash balance there in green and move into the blue part of the chart. That's there on the bottom, other long-term assets. So all else being equal, at the end of NVIDIA's last quarter, Q2 fiscal 2026, the balance sheet will remain unchanged, but less cash, more long-term investments, and $5 billion of that long-term investment balance will now be Intel stock. So congratulations. If you were hoping to eventually get in on some Intel in the hopes that they can pull off a long-term turnaround, NVIDIA did you solid.
One of the key areas of focus that Intel's new CEO, Lip-Bu Tan, said that he wanted to work on is Intel's balance sheet, paying down some of that long-term debt.
Yeah, and it's obviously this is not the world's ugliest balance sheet, not even the tech world's ugliest balance sheet. I think a lot of investors have discovered Oracle's balance sheet in recent weeks. We're going to talk about that over on Semi Insider later this week and beyond. Check that out at chipstockinvestor.com, Semi Insider, where you can get all our research, our live events, and a lot more. So obviously Intel's balance sheet is not Oracle's balance sheet, but the problem, as you'll see as we go through this, is having nearly 30 billion in net debt for Intel is actually a very big deal because they have struggled not just with their sales the last 5 years, but more importantly, with their profitability as they steadily lose market share in both the data center CPU market and the PC CPU market. So balance sheets become especially important, especially when a company is no longer growing its profitability or in fact has dealt with net losses and negative free cash flow like Intel has for years now. So that makes sense that Lip-Bu Tan would strike a deal like this and ask Intel to write them a check and issue new stock in exchange for that. Casey, what everybody really wants to talk about though is the products. NVIDIA and Intel products. I mean, surely this is the start of a new era for computing. NVIDIA and Intel teaming up. I mean, it's game over, right? Everybody else in the chip world is automatically now on the back foot.
That seems a little overstated. Let's talk about why. This is really good news for Intel. But let's focus on three key things that we can take away from that co-conference. The first thing, NVLink. This co-partnership with Intel CPUs is all going to be made possible by NVIDIA's NVLink. NVLink is NVIDIA's GPU interconnect technology.
So obviously, NVIDIA taking a $5 billion equity stake in Intel means there's going to be a bit more of a special agreement there between the two companies in co-developing infrastructure for data centers or consumer products for PC, all made possible thanks to NVLink and NVLink Fusion. However, the point with NVLink Fusion announced back in March was that anybody that designs chips could make use of this if they want to play in NVIDIA's ecosystem. And of course, NVIDIA is going to be more than happy to oblige anybody that wants to, because it means NVIDIA gets to sell NVLink Fusion IP and chips, and also gets a cut of whatever that chip designer or chip maker's ecosystem is that it perhaps didn't have access to before. And so it's no different here with Intel. All NVIDIA is doing is helping sway the global electronics and semiconductor supply chain to itself. With a name like Intel, there is a lot of installed base out there in x86 that NVIDIA doesn't address, both in data center and most definitely PC. Jensen had mentioned 150 million roughly PCs and laptops they don't sell any GPUs to every year. So NVIDIA getting in on a very large installed base and growing its business. But Kasey, there is a problem here, because you could look at this and think this is an automatic win for Intel, but it's not that simple though either, is it?
No, it certainly isn't. In fact, this leads us to our second key point, going back to Intel's turnaround strategy. Intel has to focus on getting a product that people actually want. It won't be enough to just slap a NVIDIA sticker on these PCs or servers. It will be much more than that. And this is where developing those new products will come into play. Intel has been struggling with this over the recent years, and AMD has been taking market share away from Intel in this area.
Here's a chart showing the high level total revenue of both Intel in blue and AMD in orange, especially starting about 5 years ago. AMD market share really started levying the hurt on Intel, both in PC and data center, mostly in the CPU market, especially because remember, Intel is a very distant third place, almost a non-meaningful contributor to accelerated computing behind NVIDIA and AMD. In fact, even AMD's second place behind NVIDIA and GPUs is almost not meaningful at this point. Intel's really just non-existent. So this is mostly the CPU market where Intel has been coughing up this market share, favoring AMD. So if this partnership is going to work, it certainly gives a boost to Intel, having, as you said, not just an Intel Inside sticker, but now maybe NVIDIA Inside sticker next to their own. Definitely adds some legitimacy for a lot of potential customers, but we can't just take it for granted that simply having NVIDIA slapped on the side writing sidecar is going to automatically land Intel a victory here. They still need to execute on the product side. And in turn, because they waited way too long, and now it's probably too late to completely separate the foundry business from the products business, Intel's best bet to fix foundry is for Intel products to return to demand, because that is Intel Foundry's largest customer, is Intel products. That was why Lip-Bu, when he came on as CEO, said, fix the balance sheet, and we need to refocus on developing products that customers want. And so this is a step in the right direction, but they're still going to need to execute. And a lot of other companies, especially in the ARM ecosystem, as well as AMD, are going to be figuring out how to counter this announcement over the course of the next year or two, because it will be at least a year before there's an actual product out there available to purchase from Intel and NVIDIA.
The final key point in this video that we want you to take away is that this is a really big deal for Intel. This is a lifeline, in fact, for Intel, but this is also a really big deal for NVIDIA. NVIDIA is, of course, a leader in GPU and accelerated technology, but they also can start to compete in this segment right here, Intel's client segment. Although Intel has been struggling, $30 billion a year in the last 12 months in this segment alone.
Yeah, that's a big market that, for all intents and purposes, NVIDIA doesn't participate in, because especially in PC, they only sell discrete GPUs, a GPU system that is separate from a CPU, which oftentimes, whether it's from Intel, over 30 billion in revenue, or an AMD chip, as pictured here, AMD on the rise, nearly $9 billion in PC chip sales in the last 12 months. The majority of these segments here are good old-fashioned CPUs in desktops and laptops. And a lot of these CPUs have an integrated graphics block on the actual CPU die. NVIDIA now gets to sell GPU chiplets that Intel can package into these designs. NVIDIA potentially gets a cut of this very large market they have been absent from. Potential win for Intel, most definitely a win for NVIDIA because they got their foot in the door on a new market in PC, and a lot of focus out there from investors, and perhaps rightfully so, about market share dynamics and the competitive landscape between all these companies. But at the end of the day, what do we really care about as shareholders, as investors? A company's ability to just grow its profitability. That's really what drives a stock price higher, not market share. Of course, market share is one component of that, but really at the end of the day, this is just NVIDIA doing what NVIDIA needs to do and make sure that its long-term earnings potential continues to go up. I think it can be that simple. In fact, it is really that simple.
We'll be keeping a close eye on this and other news over on Semi Insider. Make sure you check it out, chipstockinvestor.com. And if you want to take your analysis to the next level and make cool charts, check out fiscal.ai/CSI. And we'll see everybody very soon here at Chip Stock Investor.